Welcome back to another video. So in today's video we will be doing income statement and balance sheet. This is part of paper 1, and this is a question from the November 2022, which was written by the matriculants of the year 2022. Is 150 marks for 2 hours. This question paper was downloaded from the Stanmore Physics, or just say the Stanmore website. So instructions and information. Read the following instructions carefully and follow them precisely. So when you get your question paper, it's highly important that you go through instructions to hear what the examiner has set out for you, because there might be something in the instructions that affects the whole question paper. So number 1 says answer all questions. 2 says special answer book is provided in which to answer all questions. 3 says a financial indicator formula sheet is attached at the end of this question paper. Show all workings to earn part marks. And then you may use a non-programmable calculator. You may use a dark pencil or blue or black ink to answer questions. Where applicable, show all calculations to 1 decimal point. That affects the entire thing. If they do not tell you how to round off, to 1 decimal point. Write neatly and legibly. Use information in the table below as a guide when answering the question paper. Try not to deviate from it. So you can watch the videos that I have already posted. I have posted question number 2 already. I posted question number 3, and now I'm doing question number 1. Then after question number 1, I will do a video for question number 4. Then we can look at possibly doing paper 2 for next week, as you will be writing this week, and then next week is paper 2. We will see how we post for paper 2 as well to help you. It's a revision series. Please check out the previous videos. So question 1, company financial statements. Please subscribe, like the video, it helps the channel. Company financial statements, statement of comprehensive income and statement of financial position. It's 60 marks, 45 minutes. So there are a lot of marks to be gained from question 1. The information relates to Leisano Limited for the financial year ended on 28 February 2022. We are big girls and boys now. We know that when the financial year ends today, it starts tomorrow, right? So keep that in mind. It ends on the 28th of February 2022, meaning it starts tomorrow on the 1st of March 2022. That's the new one. So meaning the financial year always starts on the 1st of March. So this one specifically started on 1st of March 2021 for it to end on the 28th of February 2022. So you can calculate from the 1st of March 2021 to the 28th of February 2022 is exactly 12 months. We are big girls and boys, but you know what? Because I like you guys, I will tell you this information. Refer to information B. So 1.1, we are required to calculate the cost of the stock that was damaged. So we'll definitely just go and tackle that now, so that we can get it over and done with before we go to our financial statements. So we are asked to refer to information B. So this is an extract, balance sheet and totals from the records on 28 February, but that is information A, so we will skip that and go to additional information B1. This is where we were told to look at. So the business sells sports shirts. The weighted average method is used to value the shirts. The following information was extracted from the records. So stock on hand on the 1st of March 2021, we have 1,900 units. Purchases during the year, total available for sale, stock balance on 28 February, and then units sold. And then we have unit price, and then we have the totals then. So damaged shirts were not included in the closing stock figure. the damaged shares must be written off as a loss. So what you have to do here, you have to calculate the value of the items that were damaged, and for that you're going to take total available for sale, which is 9,000 rand, and then you're going to subtract units sold, which is 7,750, and then you will also subtract stock on the 28th of February 2022. And when you subtract those two items, you are going to get 65. So 65 units were damaged. Now we need to find the value for them. So they will use weighted average method, meaning you are going to take that 6,579,000 rand and divide it by those 9,000 units, and that is going to give us 731. And then you take the 65,000 times 731, that will give you 47,550. Let's do these practical examples with you. So look at everything. Write availables, total available for sale, closing balance of units, write the units sold, and then the total was 6,578,000 rand, total available for sale, that is their value. So we can do these calculations. So we're going to be busy with calculations. This is cost of stock damaged. So cost of stock damaged, I said we will take the 9,000 and then we'll subtract the 7,750, which was stock sold, and then minus the closing one, 1,185. We can put that in brackets, and that will give us 65 units. So this 65 units is damaged units. And then to have its value, we'll take the 6,579,000 and divide that by 9,000, and that is going to give us 731. So we'll take 65 multiply by 731, and that is going to give us 47,515. So this is the stock of damaged goods. This is 1.1. And then 1.2 says, 1.2.1 says, calculate the profit or loss on sale of delivery vehicle and then total depreciation for the year. So what you have to know with regards to sale of fixed asset, you have to know that fixed assets are sold at you have to look at the carrying value of the sold asset. If the amount that the vehicle or the equipment was sold for is lower than the carrying value, that's a profit, right? So we have sold the fixed asset, or if we sell the fixed asset and the amount that we sold the fixed asset for is way bigger than our carrying value, that is a profit. But if the amount we sell our fixed asset for is lower than the carrying value of the asset being sold, that is a loss. Keep that in mind. So you look at the carrying value, Okay, you'll be given carrying value at the beginning of that asset, and then you'll be told this asset was sold for this much. You have to calculate the depreciation of that asset for this financial year and apportion the months appropriately, and then subtract the depreciation for this month from the carrying value, and then you'll get the carrying value at the end. Then you will evaluate after depreciation was taken out, compare that figure with the amount that the vehicle was sold for. The vehicle has to be sold for an amount that is more than the carrying value after calculating the depreciation for this year, for it to make a profit. If it's not like that, guys, then it is a loss. The carrying value is more than the amount that the item was sold for. That is a loss. The carrying value is less than the amount that the vehicle or the fixed asset was sold for. Then that is a profit. So always know that the amount that the vehicle was sold for has to be more than the carrying value. Keep that in mind. So we are asked to look at B2. So we are going to do 1.2.1 and 1.2.2, the depreciation for the year. So let's look at the depreciation. Here we are. This is the fixed asset note. Land and buildings, nothing. Vehicles, we don't have the amount for this year. Accumulated depreciation on vehicle. Equipment, accumulated depreciation on equipment. Depreciations, vehicles are depreciated at 20% per annum on a diminishing balance. Equipment is depreciated at 15% per annum on cost. So the bookkeeper calculated the total depreciation as 328,200 before taking the following into account. So for vehicle and old vehicle, so the depreciation for the vehicle that was sold was not taken into account, and it needs to be calculated. So if this year the vehicle only we had the vehicle for like 6 months, the months that the vehicle was with us in the business, we have to calculate that depreciation. So I hope the audio quality has improved. An old vehicle with a carrying value of 170,000, this is the carrying value at the beginning of the year, on 1 March 2021 was sold for 140,000 rand on the 1st of December 2021. So the vehicle are depreciated on 20% per annum on diminishing balance, meaning they are calculated on the carrying value. We say cost minus accumulated depreciation, and that gives us the carrying value. So we can be able to calculate the depreciation of the vehicle that was sold using this carrying value amount. So let's see, the vehicle was sold for 140 on the 1st of December 2021. Before we even calculate depreciation, the amount that the vehicle was sold for is less, but let's see if it still be less after depreciation has been taken into account. So we had the vehicle from the vehicle was sold on the 1st of December and the financial year ends on the 28th of February. So let's start. We had it from the beginning of the financial year, which was March, April, May, June, July, August, September, November. So that was, let's calculate again. March, its first month. April, May, June, July, August, September, October, and November. That is 9 months. So we have to calculate depreciation for that 9 months. So this is the depreciation on sold vehicle. This is 2.1.1, 1.2.1, and then the carrying value is 170,000 rand. Then we're gonna multiply that by 20 over 100, and then multiply it by we had the asset for 12 months, divided by 9 divided by 12, and that's going to give us 25,000 rand. So we will take the loss or profit. This will be profit loss on vehicle. We will have 170,000 rand. That will subtract the 25,000 rand, which is depreciation, and that will give us 144,500. Then this is the carrying value. We can see that this carrying value is more than what the asset was sold for, so we are in for a loss. Minus 140, this is the amount that the vehicle was sold for, and then we get 4,500 rand. So that is the loss. We got loss. And then let's also calculate depreciation on equipment. So we have to do that calculation. They said an alarm system costing 48,000 was installed on the 1st of August 2021 during the financial year. So we have to calculate it was installed on 1 August. We have to August, September, October, November, December, January, February. So that is exactly 7 months. So we had the alarm system for 7 months, and equipment is depreciated 15% per annum on cost. So we will take the value of the alarm system is 48,000. We will multiply that by 15 divided by 100 times as well by 7 divided by 12, because we had it for 7 months, and that will give us 4,000. This will give us 4,200 rand. Yes. So the calculations of cost of damaged goods, depreciation on sale of vehicle, and depreciation on equipment. And then 1.2.2 says total depreciation for the year. So remember, for total depreciation on the year, the bookkeeper calculated the total depreciation as 328,200 before calculating the depreciation of the new alarm system and the vehicle that was sold. So we have to calculate to add that. So we'll have depreciation before adjustments, which was calculated as 328,200, and then depreciation on vehicle sold, that is 25,500, and then we also have depreciation on alarm system, and that is 4,500, and then total depreciation. This is the amount that will go to the income statement of 357,900. This 357,900 will go to income statement, and the 4,200 is 4,000 4,200. Yeah, the 4,002, oh, it's already added, we don't have to. So this total for depreciation 357,700 will go to the income statement, and then also the 47,515 will go to the income statement as stock loss, damaged goods. Now we are told to calculate, to do the income statement for the year. So this is how the memo looks like. Even if you did the leisure format for question 1.1, you still get your marks. And then this is the calculation for profit and loss on sale of delivery and the depreciation for the year. So we're going to work on the income of comprehensive income, statement of comprehensive income, sorry. So let's go straight to the adjustments and do the adjustment as we go. So the first adjustment after depreciation says 33,700 received from a debtor whose account was previously written off as irrecoverable was posted in error to the debtor's control account and must be corrected. So there was 33,700 received from a debtor whose account was previously written off as irrecoverable. This person was in bad debt, and now they have come back to pay what they owe us. And this amount was posted in error to the debtor's control account and must be corrected. So in the debtor's control account, that will be corrected in the balance sheet. So firstly, let's check. This is the answer sheet. Sales, cost of sales, cost profit have already been entered. Commission income, director's fees and audit fees, interest expense, operating profit and net profit after tax. And then for the extract of statement of financial position, you're only going to do equity and liabilities. So we're not doing assets. Yep. Yeah. So we are not required to do the current assets. So we'll just be putting this under other income on the income statement, because a person who was previously written off as a bad debt, whom we thought we would never get our money from as a company, has now paid us, and we are happy to have this income for this financial year. So we have to enter it. This is under other operating income. So that will be written as bad debts, recovered, and for that amount of bad debts recovered, we'll just write 33,700. I just like to do the income statement with the adjustment as I go. And then there's also provision for bad debts adjustment, must then be adjusted to 3% of the debtor's control balance. So let's go to the pre-adjustment trial balance. Yeah, this one here. And then we'll see that provision for bad debts or debtors control. For debtors, first, previously we had 85,840. Now we have to make it 3% of debtors control. When we look here, the debtors control balance is 2,746,300 rand. Then we multiply that by we have to get 3% of that amount, and that is 82,389. And then the bad debts at the beginning of the year was 85,840. So we are going to subtract the one that we have from the 85,000 rand. This will be so it has decreased, which means more people have paid than we had anticipated. We have provision for bad debt adjustment, and for that I'll just write it here, the calculation here, which is 85,840 subtract the 82,389. So how you got this one? We said 2,746,300, and we multiply it by 3 divided by 100, and that's how we got to 85,800, and here we get 3,451. Yes. So the business signed a contract with Always Safe Securities for guarding the premises. An annual premium of 32,400 for the period ended 31 July 2022 was paid in full on the 1st of August. Sorry. So on the 1st of August, we paid 31,000, which was for 12 months. So we paid, let's see the months that are within this financial year. It's August, it's September, it's October, November, December, January, and February. So 7 months are within the financial year. So we're going to say 12 months, subtract the 7, and we'll have 5 months which are paid in advance. So 5 of those months are paid in advance. Now we have to subtract those 12 months. And then before we calculate, let's look at the amount here. For security expense, 72,500 rand. So we have to subtract those 5 months. They are paid in advance. So we owe them. They know we paid them, so they owe us. It's part of debtors control, but we are not doing the debtors, the asset side of them. We're not dealing with the assets. We're just dealing with liability, equity, and liability. So for that calculation, that is the calculation for security. We paid 32,400. Let's divide that by 12 months. It said it was paid for 12 months, and then we get 2,700 rand. Now the 2,700 rand will be multiplied by 5 months. We paid it from 1 August. So from the time we paid it to the end of the financial, it's 7 months. So 7 months are within the financial year, and the 5 months is outside of the financial year. So that will give us 13,500 rand. So we have to subtract 13,500 rand. Those are operating expense. That is security expense. Then we're going to have open bracket, and then the 72,500 from the trial balance. We'll subtract the 13,500, we just calculated. So 72,500, yeah, that will give us 59,000 rand. Yeah, I just like doing the balance sheet with the adjustment, makes it quite easy. And then we have all details in respect of the February 2022 salary of an employee were incorrectly debited to the sundry expense account. The following information relates to his salary. Net salary is 11,525. The pay as you earn 3,235. Pension fund is 990. The business contributes 2 rand for every one deducted. For every 1 rand deducted for pension fund. The EFT payments have already been processed for all relevant payables. So it was incorrectly debited. This amount was incorrectly debited. So you are going to add back everything that was paid to have a gross salary to enter this amount correctly, and add it to the salary and wages journal. So we are going to add the 11,525 plus the 3,235, and then the 990 plus the contributions by the business. Company contributes 2 rand for every 1 rand, so that will be 990 divided by 2, and it will give you 1,980. Now let's go here and look for the amount for salaries and wages. Salaries and wages. Yeah, 1,381,500. So we're going to add the person's gross profit, gross income. So for gross income, we'll take the net and add back the deductions to the person's salary to get the gross. So here, salaries and wages. For salaries and wages, we will have a calculation here, which is the amount from the prior trial balance, or the one that we are given, that shows what was paid during the year, and then we will add 11,525 net salary plus the deduction. Yeah, so the amount, we will have to write the amount of salaries. The total is 1,399,230. So yeah, here we are. So rent adjustment, it says a tenant has been leasing office space on the premises since March 2020. She has paid the rent until 30 April 2022. And note that the monthly amount was reduced by 1,350 with effect from 1 January 2022. So the amount for rent was reduced by 1,350 from 1 January 2022. So this the rent ends in April 2022. So they have paid a lot of money. So let's say we will take 1,350 and multiply it by, so on the 1st of January the rent was increased from January, February, March, April, May, June, July. No, sorry, I've passed January, February, March, April. It's 4 months. So we'll say the 1,350 times 4 months. That will give us 5,400 rand. So with regards to this rent, a tenant has been leasing space on the premises since 1 March 2020. She has paid the rent until 30 April. So in this current financial year of 2021, she has paid the rent until 30 April. So the financial year ends on the 28th of February. So she has paid March for next year and April, which means there are 2 months in advance, which needs to be subtracted from the 183,600 that appears here. So write that amount down, 183,600. So another thing that has been said here, we have 2 months in advance that has been paid for. And again, note that the monthly amount was reduced by 1,350 with effect from 1 January 2022. And the financial year ends on 28th of February. So January and February, those 2 months, the rent was decreased by 1,350. So we cannot just take the amount that we get from the trial balance and divide it by 14 months, because there is a decrease that has taken place. So what we will do, we will have to find out for how many months did the 1,350 apply for. So we'll start from the 1st of March until the end, until December, because January the increase took effect. So we'll say March, April, May, June, July, August, September, October, November, December. So that is 10 months where the 1,350 was still paid. So we will take 1,350, multiply that by 10, which will give us 13,500 rand. Then we will take, that is the 1,250, which makes it impossible for us to just divide the amount by 14 and then subtract the 2 months that we paid in advance. So we will go to take the amount for rent on the trial balance, 183,600 rand, and then minus the 13,500 rand, so that we can get a fixed rate or an equal part that we'll be able to divide by. And then that will give us 170,100 rand. Don't worry, I'm going to write them down with you. So I'm just giving you a explanation so that you can understand when I do this calculations. That will give us 170,100 rand. Now we don't have the 1,350. We can divide and get an amount for every month. We divide this by 14. This gives me 12,150 for each month. That does not have the 1,350. So that makes so much sense for us, because from January the 1,350 was no longer paid. the rent was decreased. So we take the 12,150 divided by 2, and this gives us 24,300. So we are going to subtract the 24,300 from the 183,600 rent, because it's the one paid in advance, and we are going to also include it under trade and other payables because we owe them. They paid us more, now we owe them. Everything that was received in advance, it's under creditors. At the end of the financial year, we owe them. In the income statement, we only write income that we have earned or expenses that were incurred. We are doing calculations for rent income. So we have 1,350 multiplied by 10, as I've showed you, I explained to you, that will be equals to 13,500 rand. So this will be from the 10 months is from the 1st of March until the end of November, and then we'll take 183,600 and subtract 13,500 rand. That will give us 170,100. 170,100 will be divided by 14 months, and that will give us 12,150, which will be multiplied by the 2 months paid in advance, that is 24,300 rand. So this is how much we'll subtract. We'll go to other operating income, and then here just write rent income in the bracket. We will have 183,600, and that will subtract the 24,300. That will give us, let me do it, 183,600 minus 24,300. That will give you 159,300. We also have to include it in the statement of financial position. The 24,000 under current liabilities, trade and change the color, trade and other payables. So we are going to include this amount. Firstly, we'll just use 428. This is the amount for creditors on our trial balance. In fact, let me do this calculation at the bottom so I can have space. This will subtract the 24,000 that was received in advance, 300. Look at the creditors control. Here is 428,000 rand. So that's the one we used on the previous calculations for trade and other payables. Now we do income tax. Income tax for the year is calculated at 30% of the net profit, and the net profit after tax is 356,300 after adjustments. So when we come here, the net profit will be calculated on the amount of net profit before tax. That will give us 152,700 after you have done everything and you have calculated. But they have given you the net profit after tax. So that net profit after tax can be used. So what we will do is that we will take the 356,300, multiply that by 100 over 70. Right? So basically we are trying to get the net profit before tax. So we will take the net profit after tax, because for us to get here, 30% was deducted from the original to get to 356,300. So what we do is that we want the 70% that is missing, the total amount before the 30% was deducted. So you say 100 minus that, you get 70. And then you will take the 356,300, multiply it by 100, divide by 70. Okay, so we will do the income tax calculation. So we are given the net profit after tax, which is 356,300, and tax is calculated at 30%. So this amount includes is the amount after the tax was calculated. So we are looking for the 70%, the total amount before tax was calculated. So that will give us 509,000 rand. Then we'll take this amount that we got, and then we'll times it by 30, divide by 100, and that will give us 152,000, which is the net profit, which is the income tax. So if you take the 152,700 and add the 356,300, you will get the 509,000 rand. So we are going to go to the income statement, interest expense, and then we'll have net. After interest expense, you're going to have net profit before tax, and after the net profit before tax, you will have income tax. And we've calculated our income tax as 152,700, 152,700 rand. And the net profit for the year, it was given to us as 356,300. Yeah. So this 152,700 will take it under current assets. Trade and other payables, and then we'll have SARS income tax, because they haven't said we paid it yet. So here we'll have a calculation of 152,700. Yeah. All transactions with respect to the loan were recorded. Please Don't forget to subscribe. Hit that subscribe button, like this video as well, guys. Leave a comment. All transactions with respect to the loan were recorded. Interest of 142,250 on the loan is capitalized. A fixed monthly installment, including interest, was paid in full. The capital portion of the repayments will increase by 10% over the next financial year. So this capitalized interest is the one that will be interest expense on the income statement. So I will put it here on the interest expense, and that will be 142,000. Because we have to subtract it, I put it inside the brackets. I forgot we were able to calculate the net profit before tax, so I'll just put it here. And if you can see, it says income tax provisional tax payment. So a provisional tax payment of 130 was made. So we are going to subtract it from the 152,700 rand in the balance sheet here. Minus cost. A provisional payment means we paid. There was a provisional payment made to pay SARS for the income tax of the year. So before everything was calculated, a provisional one was made, and then a final one will be made as well after everything has been taken into account. So that's how much we currently owe SARS. And now like you shares and dividends. On the 28th of February 2022, there were 1,150 shares in issue, and a final dividend was declared on 28 February 2022. Total dividends for the year amounted to 345. So we'll go to the income statement to see if we paid any dividends. So we paid dividends on ordinary shares. Interim dividends were paid. Look at the bottom, for 207,000 rand. So we'll take the 345 minus the 207. So here we will have share holders for dividends, and then shareholders for dividends will give us 138,000, and the calculations is 345,000 subtract 207. That's where we get this. So for current asset, we have shareholders for dividends. Here they are. And then we also have trade and other payables so far. So after taking into account all adjustments, the net asset value was correctly calculated at 675 cents per share. So we are going to take the ordinary shares that were issued at the 28th of February. At the 28th February 2022 was a total of 1,150. So we'll take the 1,150 times by 675 cents. Under equity and liability, we have ordinary share. Let's change this color. Ordinary shareholders equity. So here we'll have 7,762,500, and the calculation is 1,150,000 times 6 rand 75. So you said 675 cents, so it's 6,175 cents. This is the ordinary shareholders equity. Then we'll take the ordinary share capital of 6,670,000 to the balance sheet under equity. Ordinary share capital will come here for 6,670,000 rand. So ordinary shareholders equity is the total. So you take the ordinary shareholders equity, subtract the ordinary share capital, and then you will get the retained income of 1,092,500 rand. Sales cost of sales, gross profit is already calculated. Other income, gross profit, then commission income. So you got rent income, bad debts, provision for bad debts, and then cross operating income. Operating expenses, directors fees and audit fees have already been entered. The depreciation that we calculated, you also enter it, and the loss on sale of asset, you also write it down. And so we also do you also do the operating profit, interest income. Let's look at interest income. We have looked at the rest, net profit before tax, income tax. So we'll just look at interest income here. But let's take care of this loan before I forget it. So all transactions with respect to loan were recorded. Interest of 142,250 on the loan is capitalized. A fixed monthly installment including interest was paid in full. The capital portion of the repayments will increase by 10% over the next financial year. So how to get the capital repayments of this loan? Let's take a look at here. Loan for this year is 1,158,000. The balance at the end of the financial year, well, at the beginning, which is for last year, was 1,280,250. So you're going to take the 1,280,750 minus the 1,159,000, which will give us 121,750. So that is the current loan portion loan. Repayments that will increase. So you say 10%, that will increase. You say time is 110 over 100, and that will give you 133,728. So you will subtract the 132,728 from the balance of loan of 1,159,000, because this 133,728 is no longer a non-current liability, will be paid next year. Loan. You will take the loan balance for 2021 and then subtract the loan balance for this year. 1,280,750 subtract 1,159,000, which is for this year. The balance, closing balance written there on the financial statement, and that will give us like this. And When you subtract them, they will give you 121,750. Then you will multiply that, you add the 10% increase, 121,750. You multiply by 1110, divide by 100, and that is going to give you 133,925, which you will subtract from the 1,159. It's no longer part of the current assets because it will be paid next year. And then we will have the balance of the loan here. So this is the balance of the loan. This is 1,025,075. So this is the loan. And then under current liabilities, we'll have current portion of loan, which will be the 133,925. So that's all the things we have under current liabilities, and this is the loan, and we are done with the balance sheet. This is the complete balance sheet. Subscribe, guys. Please subscribe. Please subscribe. Please subscribe to the channel. So this is the complete statement of comprehensive income. Thank you very much for watching, guys. Until the next video, don't forget to like, comment, and subscribe. Oh, sorry, for interest income, we're going to take the profit before interest expense, which is 651,250. Then we're going to minus the operating profit because they didn't give us any adjustment with regards to interest income. Thank you, guys. Until the next one, please subscribe.